What's up, everybody? So if you've been following my channel for a little bit of time now, you'll know that a good portion of our business here at Real Broker LI is working with investors. Some of these investors have been buying properties for 20 plus years and they own 50 plus units. Some of our investors are first time investors just looking for their first deal to get their feet wet. And somewhere it's usually, we have a lot of people who are somewhere in the middle. So in today's video, there's a property that's been on my radar for a little bit. It's in an area that I like. I think it's up and coming, this is Riverhead of Long Island, and which is along the North Fork, the beginning of the North Fork. And I figured, okay, today this would be a great time to actually walk you through what this looks like. So if I'm seeing a property that's been on the market for a little bit, I think there might be some room there to negotiate, maybe make the right deal. I'm looking at some distress signals, like they don't want to vacate the property before they sell it. How are the taxes, location, things like that, which is what this property does. It checks a couple of those boxes. The first thing I'm gonna do is run the property through my investment calculator. So I do get a lot of questions on, is it a good deal? Is it a right deal? Are you overpaying? There's a million different ways to skin the cat when you're looking at an investment property and trying to figure out if the property could be a good fit for you and your investment needs. And those investment needs are different from each investor, right? They depend on what that investor is looking to accomplish, whether it's through real estate or mutual funds or whatever they're looking to do. But obviously here we're going to take a look at a real estate deal. Again, this property is located in Riverhead, New York. Let's take a look at the calculator. I'm going to plug this in and walk you through step by step exactly everything that we look for as a broker. And then if this deal does work out, this could be something, if the numbers are good, that I can shop around to a couple of the investors that I work with and also myself if it's a really good deal. So stay along in today's video to learn a little bit about our investment calculator and some of the things that we look for when we're thinking about buying an investment property and if it's a good deal or a bad deal. So before we hop into the spreadsheet, if this is your first time watching an investment video, I just want to go over a couple of investment metrics that would be good for you to know as we go into the spreadsheet. So there's a couple of different things that we look at other than how much money is it going to cost you, what's the price of the property, and what are the comparables at, and how much are the tenants paying, right? When we're actually trying to figure out if it's a good deal. So assuming that all those things check out and it's in line with the area generally, right? Multifamily property is really going to trade at, or investment property is really going to trade at how much money the property makes and if that's in line for a similar asset. Now, the way that you're going to check that is, I like to look at a couple of different things. The first thing that we need to know is our NOI, our net operating income. So basically that's your total rent roll, the total income generated on the property. This would include everything. If you charge a little bit more for parking, or you charge a little bit more for laundry, or anything else that your property has, you would add this into your total rent, the total income the property is going to spit out. Then you're going to take away all of your fixed expenses. You're going to see on the sheet a couple of what those main things are. Some properties have other expenses that other properties don't have, maybe a different water bill or something like that they want to pay attention to, but it's going to be all the expenses that are associated with renting that property, utilities, maintenance, etc. After that, you're going to get your NOI figure. Once you get your net operating income figure, now a quick note on this, your NOI includes all of your expenses except for your debt. So no mortgage on there, right? Or interest for the mortgage payment. It will include the taxes though, and you'll see this on the sheet. So once you get your NOI, your net operating income, this is a very common figure when you're talking about investment real estate, obviously, then you can calculate your cash on cash return and also your cap rate. Your cap rate should be in line with what typically these properties are trading for this type of similar property in this area based on how much return you're gonna get. And then as far as the cash on cash goes, that's really up to you on what you're looking for. Depending on the property, depending on the location, depending on the risk associated, depending on how much cash I have in the deal, is how I'm gonna associate the type of cash on cash return that I want for that property. Generally speaking, if you're buying real estate and I manage my properties myself, I'm looking for a 10% plus cash on cash return. The way I come up with that is if in the market, if I could buy the S&P or the NASDAQ and hold it for 30 years with no maintenance other than just pulling up my trade account and looking at it, if I can get a 7 to 9% return on that without doing any work, I want my real estate property to beat that. The returns over the long period of time generally will probably be similar. So if I'm gonna manage it and I'm gonna get that income when it's paid off, I do want it to be returning at least a little bit higher than if I was to invest in an asset that takes no maintenance or time over the time period of holding it. So that's how I come up with that. We'll see what these numbers look like on this deal, and with those figures, we can kind of determine if it'd be a good deal or not. All right, so we got properties built 1895. It's an old colonial, kind of right in the main part of Riverhead there. It's not on the outskirts. You got 2,600 feet that may or may not include the cottage in the back. Again, this is a single family in the front of the home, and then in the back of the property, you've got this cottage in the back that they're getting another $2,000 from. So the total rental on the place is $5,500. See, that's the back of the main home. Then you go through here, and that's the cottage in the back. Obviously, condition, it needs some love. It needs some update in this house, so we're going to put that into our numbers. You can see here, total rent for both of them together are $5,500. Looks like down here, they do want to sell the property with the tenants in place, and they're paying $2,000 in the back and $35,000 in the front, and the tenants pay all the utilities. So that's great. So let's hop over our numbers here. Off the bat, because of days on market, I'm going to push this down to $750,000 as the purchase price. Again, we're going to play with these and see where we end up. Let's go to 25% down. I'm fine with that. We're going to be looking at a DSCR loan, okay, debt service coverage ratio loan. It's an investment loan, no personal income needed to qualify. It's one of the loans you can use. So 6.875 is going to be the rate for that. And this is a range. These are rough numbers to figure out the deal. You got your payment per period, and then you got your total PITI, principal, interest, taxes, and insurance. You're just under $5,200. Total rent, I'm going to put the current rent in place. I don't think they're far off from current rent, honestly. So it at $5,500. Yearly rent increase is going to be 3%. Now, if we go to our insurance, I'm going to put this down to $5,000. That's a good ratio for there. Maintenance, I'm going to put this up to $2,400, about $200 per month. The plan is to rehab the property. So let's say that it's new and requires minimum maintenance. Property management, I manage myself, so I'm not going to put those figures in here. Typically, you'd be looking at about 6 to 10% of the total rent roll, depending on what they do for you. And then you got your utilities, right? I'm going to put this down to 0 because the tenants pay everything. You know what we'll do for utilities? Let's do $200 per month for landscaping and things like that. So let's get this to $2,400 for the year. Now we've got our property taxes. These are, let's go back to our sheet and scroll down. We've got 8,924. So we're going to put this in here. Great. Points on mortgage is going to be part of your closing costs. These are going to be involved when we're calculating the cash on cash return. Total cash in the deal. Closing costs will be them. So let's put this in at 2% for 6,875. That's probably where you're going to end up. So let's do 2% total. That's 11,000 in points to close. And then you got your 25% of the 750, bringing you to $150K. Now, this is going to be your down payment plus your closing costs. You're going to have $187K in and then adding your points total. Now, what I did was here, I put $150,000 here for the rehab on the property. Okay. Now, you've also got your $187K for your down payment, right? So if we've got total in here and then adding in $20,000 additional closing costs for our loan, we're at $368K for all of these numbers. Okay. This is total cash in on the deal. Pretty hefty here with the rehab. Now, let's run through our figures here. So we got our monthly rent at $5,500. Now I'm going to go ahead and I'm going to up this to $6,500, which is current rent after the rehab is done. So we're going to move this to $78,000 for our gross income, right? Now we're going to calculate our NOI. We got our insurance, maintenance, we got property management, we don't have any. We got some utilities and expenses to manage, and property taxes. Now our net operating income is going to be $59,000 and change. I then can take that. These are other figures that you can look at. I keep them in here, but they're not my main thing. After all of your debt and use is paid on the property, or all of your fixed costs, this is going to pop you out about $1,200 and change a month, okay? Now, cash on cash return on that, if we spent $368K, our cash on cash return is 4%. Not good. Obviously, we talked about in the beginning, I'd like to see at least 10 minimum, ideally 15. Way off, not hitting it here at 750. Now we got our cap rate of 7.9. The cap rate's not going to include the debt, right? So that's why the number's a little bit high. 8%, I'm happy with the cap rate, but what I really want to make sure is that my cash on cash return and my cap rate line up. Cash on cash will include the debt, the cap rate won't. Now, the final figure I like to look at is I like to get my payback period at about 10 to 11 years. Here it's 25 to get your money back. So at these figures, it's really not that good of a deal. Let's try to change these numbers around and figure out if we can try to get this at a better price point. All right, so the issue why our numbers are really not looking too good here is that we have so much cash injected into this deal that in order to get our money back, we just simply don't have the time on it. And unless you can refinance after that major value add and do a really increase the property value to such a high number that you can then pull all of your money out, on a two-family property like this, putting that much cash into the deal really doesn't make any sense because it's just going to take too long to get it back. So let's try to change up how we're looking at this deal a little bit. Assuming that you believe in the area, assuming that you think that there's long-term capital gains to be made there, I might look at this property and say, okay, I'm fine with the condition. There's tenants paying rent right now, and I'd request a rent roll from the current owner and proof of payment and make sure that they're consistently paying rent if they're good tenants and everything checks out and everything's legal and good to go, and there's no major issues up front with the property. I may say, okay, I'll keep the tenants in place. I won't do any major rehab or try to increase the rents because the rents aren't really that low right now. And if there's good tenants in there, maybe I'll just slowly renovate over time. And as tenants leave, and then over that time, I can go ahead and make improvements to the units to increase the rent. But I'll be able to lower the amount of cash that's put into the deal to try to get a better return on my dollar. So let's try that a little bit. So this is at 750. I still want to knock this down to really, let's do it at 700K. Move up purchase price to 700K. Let's put our rate back to 6.875. We're going to buy with that same We're gonna buy with that same DSCR loan that I mentioned. Let's move this to $5,500. And now you got your total pity, right, is $4,600, and we know the tenants are paying $5,500. So this includes our insurance and taxes, but it does include the other expenses. Now our insurance, we're gonna check all this stuff will stay the same. Let's keep this all in place. I will just increase the maintenance a little bit to, let's say, $400 per month, because there seems to be a good amount of things that are gonna be needed on this property. So let's move this to, you know what, let's just do it at $5,000 for the year. Now, points are going to stay the same. Another initial equity spent. I'm just going to say a couple things that we're going to do up front. Let's just call it 10K. Let's say that off the bat we want to do a few things. Now you've got our down payment, we've got our closing costs involved, we've got our points on the mortgage. Our total cash is now only $215 versus that $300,000 and change number. Now if we leave that at $5,500, let's see where we end up. We actually have a lower cash on cash here by doing that, and our cap rate went down even more. That's because we messed with the rents. Move this back to $6,500. That's where you're going to see we're getting better on those numbers there. But the reality is, without doing a rehab, you're really not going to get it. So even doing a regular DSCR loan and not doing a bunch of rehab up front and keeping the tenants in place, you're really just not going to make enough. The property doesn't make enough money. So at the end of the day, the property is overpriced and the deal really doesn't work. All right, guys. So thank you for following along as we walk through this investment calculator and this potential deal in Riverhead. Not all deals work out. Things might seem like a good deal in the beginning, and then once you put them into the calculator, you get to actually see what those numbers look like. Now, if you're not only buying just based on the numbers, let's say the location works for you, you're looking for a property to live in and then rent out the cottage for a little bit of income, that's probably going to be the best use for this property, and it's probably what the seller is hoping for, because you got the detached units, which is nice if you're going to live in the home and get some income, and because they're asking, obviously, as we can tell from the numbers, a lot higher than what the area and what the property is going to call for based upon how much money it makes. So let's see what they end up with. It'd be interesting to see if this property does sell or go under contract, so I'll let you guys know if that does change. Now, if you're thinking about buying, this is what we do all day long. We use this calculator for all different types of properties. I have commercial calculators and calculators that are in more depth to help analyze maybe construction properties that need more construction and different rehabs, but this is just one of the tools that we use to help figure out if a deal is good or not. So if this is something that might help you and your interest and your investment needs, comment below calculator. I'd be happy to share the calculator with you. This is a calculator I've made my own over the years after playing around with it, but originally I got it out of a couple of different investment classes that I took. So a lot of this stuff is just reskinning the cat in my own way. But if you have any questions on any properties you're looking at, I'm happy to put it into the calculator for you as well, just to give you a baseline and see if it could potentially be a deal that works for you. Again, my name is Anthony with Real Broker. Thank you so much for tuning along, and any questions, comment below.